Hi there, traders. This is Brad Gill with the FX Market Insight for the 24th of August. All right, now as we come into Friday's trading, the big standout across the board, if you're looking at the major currency pairs like I do every day to start with, you can see all the correlating pairs, Aussie, Kiwi, Euro and Sterling all sort of drifting lower, and the dollar pairs, dollar CAD and dollar yen upwards. Now, just off the bat, you can see it's a US dollar move, right? They're all moving uniformly, all in correlation. This is a straight up US dollar move, but that's as easy as it gets, because from here, you go in there and find out what's moving what, and there's a whole range of geopolitical events that are screwing everything up. Now, yesterday's actually initial moves, especially in the Aussie and Kiwi, where they sort of dipped down a touch. I mean, Euro and Sterling had a little bit of a move, but they sort of recovered back into the early European session, was basically on the back of the dollar yuan. Okay, the yuan, was appreciating, falling. US dollar was going up. The yuan was coming off, and that sort of put downward pressure on Australia and New Zealand. Now, there's a direct relationship with those currencies with China. Okay, Australia and New Zealand, the two. China's their biggest customer as far as all of the imports goes, or exports, whichever way you look at it. So those two pairs sort of set the ball off. The ECB was pretty neutral. Once again, you've got sterling. There's all these. You'll see this as we go forward into early next year. Whole heap of propaganda about a negative Brexit. Okay, no deal being done and what the implications are. I think it's a load of crap, but that is putting a negative sentiment down on sterling as well, on top of the strong US dollar. So first of all, strong dollar, weak Chinese yuan. Okay, that pushes the currencies down first and foremost. We've got Brexit on top of that, which is pushing downward pressure on sterling. That's why it's moved a lot more than Euro. And then on top of that, we have the meeting in the US between the, change screens, between Trump, well, not actually really Trump, actually Trump's stooges and the Chinese officials. Nothing came out of that meeting about the trade tariffs. Actually, they did. They actually increased the tariffs on them while they're there. And thanks for coming to visit us. Here's an extra $16 billion worth of tariffs on top. Knock yourself out with those. So basically the dollar rallied through, not necessarily through the roof. It looks like it, because we haven't seen much of a strong move or a big move in the currencies for a while. And that's where we are. Now, you come back to the media. I mean, don't get fooled by these guys. They were talking how, the Fed minutes, worrying about the trade deals and stuff and what the US dollar was coming off. Now they're saying the Fed was talking, interest rate hikes. Well, they always were, and it always was. And I've been saying for the last few months that the US fundamentals are by far and away the strongest. So when you look at the currencies, the major currency pairs coming into Friday, right, usually you have some really top tier data Thursday, in particular US numbers Friday or Canadian numbers. We do have durable goods today, which is a key thing, but there's still so many various geopolitical issues going on. Now, we're about to change Prime Minister in Australia. Now, that's putting a bit of a negative sentiment on the Aussie, but don't forget, if you're looking at the financial markets, the Reserve Bank runs the country, right? So don't think there's going to be a massive sell-off because there's a change in a political leader. It's not like a big shift. So don't get too carried away with that. The US-China issue is a major concern. That's where the US dollar strength is coming from. Now, if that continues, then, we should just see the US dollar continue to appreciate. If I just come back and show you something today, and this is where the whole market gets a bit desensitized to the increase in tariffs and these sorts of things. Look at this last move in, if this is the tariff move, right, it's gone up, the dollar index has gone up like 40 ticks. That's like nothing. When it first started coming out, it would move 150. Okay, so, and dollar yuan is sort of just jamming away there. This is rogue. And a lot of people have been asking me, why don't we put some analysis on our web pages with the yuan? Well, it's because it's not regulated. It's not a floating currency. It's completely sort of manipulated. So it's very hard to work out if this thing's bullish or bearish. If the tariffs go ahead over the coming months, I expect the yuan to depreciate further. And that's what the whole market was expecting. And that's why we saw such a big rally in the dollar against the yuan. And then I think the PBOC, the People's Bank of China, came in and corrected that and screwed up all the speculators. And now we're back to sort of slowly, tentatively rallying again. So you've got to keep an eye on that as we go forward. Now, looking at the dollar index, Okay, all things aside, we are coming up to a really nice trend line there. And once again, the US fundamentals are the strongest by far. So looking to get long, the US dollar is by far and away the smartest thing to do. Now, if you come back down here, if I just get up the MyFX Trading Hub, now, some of you may have noticed, or some of you may not have, we've tuned up the daily analysis. Now, just first and foremost, trading conditions. Well, geopolitics are dominating. So I know there hasn't been a huge amount of economic data releases this week, which is sort of good, because if there were, they would get chewed up in amongst all this geopolitical stuff. So a lot of the moves are coming randomly out of that. Now, there's only one real key number to focus on today, and that's the US durable goods. Historically, it's a very robust, strong number, right? So that may give us some sort of inclination. What you're looking for is connecting the dots. At the moment, we are seeing US dollar strength. So by far and away, the absolute best trading opportunity, if these numbers here come in strong, the dollar continues higher, and that's an easy trade. And funnily enough, if you're looking for an opportunity, you're scratching your head, well, the dollar index is one for sure. And then if you come back to the rest of the majors, so I can just change screens quickly. Okay, you're looking at the rest of the majors there. You're coming back across and looking at where can we get into some of these majors. Well, we do have some good trend lines here on the downside in euro and sterling. Aussie's already sort of flown the coop there. I'd say, if anything, we could be changing PMs any minute. The Kiwis already had a bit of a run, so we don't have any clean levels, nor do we on sort of dollar yen or dollar CAD. So sterling and euro have got to be your go-tos at this point. All right, now if I just come back, I want to just run you through what I'm talking about with the technical analysis side of things, because what you can find out is, this is the snapshot, right? And what we're trying to do with this snapshot is just give you a bit of a heads up on where we think things are going. Like the Kiwis got a very bearish sentiment, and the US dollar bullish. Now, what I want to do is just show you, you've got to drill into the detail. And this is what you can sort of find out. Now, this is the detailed analysis for the euro, for the US dollar. Okay, so you got the central bank and technical outlook very bullish. Now, the central bank outlook has been bullish for at least 6 months, if not all year. But now what we're seeing is the technical side of things completely bullish. Now, when I see a situation like this, I'm looking for an entry level to get into the dollar, whether it's the dollar index or one of the major pairs in particular. Now, dollar yen's already gone. Dollar CAD's already correcting and screwing the market after last week's CPI numbers. So to me, the Aussie and Kiwi are in a bit of a free fall area. Euro and the pound, sterling, both fit into this. And funnily enough, with sterling, we've got the weak Brexit issue as well. So that's a negative for sterling. You've got a strong dollar. So sterling is probably the most natural pair to be selling at this point. You come back into looking at the euro. Okay, so what we've got a situation is, so the euro's got a sideways sentiment. That's primarily because the central bank and the general outlook, or the economic data or technical outlook, do not match up. Okay, it's sideways. But if you drill into the details here, right, what we do have a situation is all the time frames, weekly, daily, and hourly charts are pointing down. The hourlies are only just pointing down, not like sterling, which are a bit stronger on the downside. I've included it as a down one, but this is when you see a technical outlook and it's say sideways, I'm looking for a direction, and this is a good technical trade. Not an overall fundamental trade, just on the technicals and on the back of the strong dollar. Once again, that's where the key element is. Sterling, now this is a tricky one, right? We've got strong economic numbers. We've got a strong sentiment from the central bank, but we've got an extremely bearish outlook. Okay, so that's why it's sideways. And once again, if I just scroll down here, you can see the time frame here, the technical side of things is completely down. Right, so that's where that downtrend may come in. So even though the UK fundamentals are up, the US dollar may dominate here and really give this thing a real good thumping, especially if those durable good orders are strong. You come back into the Kiwi, okay, same sort of deal. Now, of course, we had a short-term strength on some of these currencies during the week, but overall, the central bank is bearish. The technical outlook is bearish as well. And if you come back down to the technicals, once again, you'll find that Kiwi is once again bearish on all technical fronts. So when you get these technical bearish outlooks, you're looking to focus on the raw nerve in the market. Now, it's the US dollar. And I've isolated the US dollar here just by looking at the dollar index, but you can see how very clear it is where the opportunity lies. So to me, we've got to be looking to get long dollars. Now, that's either on a dip, and I don't think it's going to dip down to 95.10. I think potentially it's on a break of sort of 95.75, and we should see this thing really take off. I mean, all you get to look at is previous highs. You're looking up here around sort of 97, the figure. All right, so that's where we are. So you're looking at the numbers, trying to work out, we know where things are technically, and that's where you come in to look at the upcoming opportunities. So this is where you get to Friday and you really get a good feel for what's going on. And that's when you start to get pissed off at the weekends here, because you lose all of that momentum that we've been waiting for is finally in the market. Now, what I'd love to do is have 3 days to start trading from now, because we've got clear direction, we've got momentum, we've got the currencies exactly where we want them. And this happens a lot. The weekend comes and rubs out that momentum. So that's a real bit of a shame. So just keep an eye on these numbers as we go through that. And as I said, geopolitics are really dominating proceedings. So what you've got to do is just keep an eye on things. Now, what I suspect, right, this is the whole thing about these Chinese tariffs. Trump is in a whole heap of cow dung in the US. Cohen has thrown him to the wolves. Okay, like Cohen, his ex-legal advisor, has, been caught on say 15 charges of fraud, tax evasion, all sorts of crap. Now, they would be doing a deal with him to throw Trump under the bus and get him impeached. The only one thing Trump can do to distract the media is to actually create some other external events. China is one of them. Now, I would suspect he would be trying to pick fights with anyone at the moment to try and get the news and the focus off him. He doesn't want people in the US reading about him and how he's so deceitful and everything else. Well, I think everyone knows that, but so just be aware, these geopolitical issues may escalate as Trump is in trouble domestically. I think that's the way we've got to go. You can expect this sterling issues, with regards to Brexit, to continue. That's until, I think, 20th of March next year. So that's going to be a nightmare for some time. Don't forget, we've got this Jackson's Hole Symposium on over the weekend. And I think at the end of today, Friday, Jerome Powell, the Fed chairman, is due to speak. And the markets, if you read some of these news, it's just a whole heap of crap. But investors brace for Fed's Powell. Give me a break. He's not about upsetting. If he's the actual calmest, he and Draghi would be a good pair, because they are super calm in amongst all the kerfuffle. Now, Powell has been openly criticised. He was appointed by Trump. He's now being criticised by Trump about the interest rates and stuff. It's water for ducks back. He's extremely solid, and I don't expect him to be doing too much else. What may come out of this symposium, though, is a group comment about we've got to sort out, international trade and what the impact is on a number of different countries. If anything, the US dollar does get stronger with that. They've got the best internal, fully 360 degrees economy. Everyone needs the US. They don't need everyone else so much. So that's going to be the situation. So I don't think Powell's going to weigh into that too much. All we can do at this point is really sit back and have a look at what the impact is with the two currency pairs that are involved with this. And that's obviously $1 is the natural pair, and then you've got the dollar index, which is the US dollar against the major currency pairs, the basket of currencies. So you can see what's going on here. The yuan doesn't really know what's going on. It's up and down 200 or 300 points every other day of the week. So it's pretty tough. So coming back to your majors, just focus on, direction. Try and match this stuff up where these majors are going with your overall analysis. As I said, when you look at the Bank of England, it's a bit sideways, but we do have a really good outlook there as far as technical outlook. The euro as well, pointing down, although we don't have the sideways direction. But what we do we have a very strong US dollar. And just imagine if these US numbers start to kick in, and that's what I said, if the US durable goods are strong, this thing should really get a rocket underneath itself and take off. And that's where the majors could be in trouble later today. All right, guys, that's the FX Market Insight for today. If I don't see you in the trade zone, have a good weekend and good luck trading for the rest of the day. Cheerio.